Good day, everyone. My name is Adam Livingston, and I am the Bitcoin Wizard. Welcome to this presentation about Strategy's latest move, a move so brutally competent that it has instantly reduced every Saylor hater on the internet to emotional rubble. Today, I am going to walk through Strategy's new $1.44 billion USD cash reserve, and I am going to use it to shut down every single recycled Ponzi claim and how Strategy has positioned itself as the most creditworthy Bitcoin treasury operation on Earth. Before we begin, though, let me acknowledge the critics that are out there. These are people who still think that Bitcoin is stored in some giant server somewhere, and they believe dilution is a conspiracy, not a financing strategy. They looked at a company that's holding 650,000 Bitcoin, and they said that it was going bankrupt. They have looked at fair value accounting and managed to misunderstand numbers that are printed directly in front of them. These are not serious people. These are people who fail CAPTCHA tests. So this is what I'm covering. One, Strategy has now created a liquidity wall so large that even S&P Global has to stop pretending that the company was one bad week away from liquidation. Two, the USD reserve covers nearly 2 years of preferred dividends and debt interest, which puts an end to the fantasy that Strategy is at risk of forced selling of their Bitcoin. And three, Strategy continues to scale their Bitcoin accumulation while maintaining full operational stability. And I'm not getting defensive, kids. I'm just saying this is administrative competence on a level that melts the brains of critics who still quote 2013 Reddit posts as financial research. Let us continue, but before I do, I want to give a quick thank you to Horizon for sponsoring this video. If you didn't know, Horizon helps you take your trapped home equity and they take it and help you buy Bitcoin with it. That's correct. You can buy the Bitcoin dip with your home equity. And also, if you wanted to, you could buy MSTR with it if you like. There's no risk of forced liquidation. There's no debts. There's no monthly payments. And there's no term limits. It's glorious. Click the link in the description below, joinhorizon.com. I'll talk more about them at the end of the video. All right, here are the highlights of today's announcement. These are the bullet points that caused every single anti-Saylor Twitter blogger to twitch uncontrollably in their sleep. This is the part of the presentation where we calmly walk through the facts that the critics will spend the next 6 months pretending to not understand. First is the $1.44 billion US dollar reserve. This was funded entirely through ATM common stock sales, no leverage, no financial gymnastics, no mystery loans from shadow banks, just an adult decision made by a company who understands how liquidity works. This reserve covers more than 21 months of dividends and debt interest. If Bitcoin froze in place for almost 2 years, Strategy could still pay every single bill without blinking. Critics have spent the last 5 years predicting a liquidity crisis for Strategy, and now they have to watch a company hold more cash than their entire home state. Second is their 650,000 BTC position. That is now 3.1% of the entire fixed supply. That's not a small number, kids. This is a national scale position. There are governments with less strategic foresight than Strategy. Yet the same people who cannot interpret a basic balance sheet are still online insisting that this is reckless. They act confused every single quarter, which is impressive because the number keeps going up on transparent filings that anyone can read publicly. And third, there is now updated fiscal year 2025 guidance. The assumed year-end Bitcoin price is now in the 85,000 to 110,000 range. This reflects the market volatility that we have seen, that every adult in the room understands because, hey, Bitcoin is volatile, no surprise there. Strategy has chosen realistic numbers instead of fantasy, and critics might complain anyway because they dislike reality as a general concept. But this is the backbone of the entire update. The cash reserve, the Bitcoin position, and the updated guidance. They're collectively showing a company that is not guessing. It is executing, it is planning, it is operating in a way that completely disproves every single bad prediction that is ever circulated on Twitter or the comment section of CNBC YouTube clips. The USD reserve is a dedicated liquidity buffer that pays every preferred dividend and every interest expense without touching a single sat of the Bitcoin treasury. Critics said Strategy would be forced to sell their Bitcoin. The company responded by building a reserve designed to guarantee that they never have to. And watching the critics react to this morning has been like watching someone fail to comprehend that a bill has been fully paid. And the funding approach has been very simple. The proceeds came exclusively from at-the-market common stock offerings, no debt, no complex instruments, just a straightforward use of the equity markets to build their cash reserves. The fact that this basic financial action has confused so many people is a case study in the collapse of public financial literacy. Now the maintenance strategy. Well, management retains full discretion to expand the reserve as needed. They already cover 21 months of obligations. They intend to increase it to 24 months and beyond, and that level of stability eliminates every argument that strategy is exposed to short-term volatility in some dangerous way. The critics are going to pretend that they never heard this, of course. They will post long threads about dilution while ignoring the parts that the company deliberately built a 2-year operating runway. On the right side, you're going to see the numbers: $1.44 billion of cash, 21 months of coverage, that's their runway, and a target coverage of 24 plus months. These are not vague assumptions. These are the operational facts that every serious investor has been asking for, and now strategy has now delivered. Saylor's comment at the bottom says it very clearly. The USD reserve is going to complement our BTC reserve, and it's going to better position us to navigate short-term market volatility while maintaining our long-term Bitcoin conviction. This is a plain statement from a company that understands how to operate in volatile markets. If you don't remember, they survived the 2022 crypto winter. The fact that this level of responsibility causes emotional distress for all of the online critics is not strategy's problem, so let's move on. Every time strategy updates its holdings, the number gets bigger, the company gets stronger, and the haters get angrier. It is a very reliable cycle. They just bought 130 Bitcoin last week. That brings them to 650,000 Bitcoin, 3.1% of the entire supply. No other public company is even in the same universe as strategy. You would think that this would cause people to pause and reflect. Instead, it has caused entire online communities to insist that the company is one bad week away from collapse. Their emotional stability depends on pretending that this number doesn't matter. Next is their updated BTC yield targets 22 to 26% for the fiscal year 2025. This is obviously achieved through disciplined preferred stock offerings and strategic common stock issuances. We all know that this has been the case. Critics keep repeating that the company prints its way into failure, but in reality, strategy is using the capital markets exactly as they are designed to be used. The idea that the company should not raise capital to strengthen its treasury with a finite asset is a belief held exclusively by people who cannot explain what a balance sheet even is. And now the dollar gain target, which is always good to reference for the fiat-brained normies out there, $8.4 to $12.8 billion in expected BTC appreciation. This assumes a year-end price range of that 85 to 110,000, so strategy isn't making wild predictions. They're modeling the realistic volatility of Bitcoin and setting targets based on its current pricing environment. Remember, this company went from $500 million of cash 5 years ago to now printing between $8.4 billion and $12.8 billion in BTC dollar gain in one fiscal year, which is obviously pretty incredible, but because that's capital appreciation of an asset rather than an operational business, Wall Street just has their brains broken. Total shocker. But these are the same people that think Bitcoin is permanently doomed every time it drops 7%. And then we have their capital strategy. They're literally just using fair value accounting. This maximizes the earnings sensitivity, obviously, and reflects Bitcoin's market value accurately. Remember, the critics complained for years that Strategy's accounting understated their Bitcoin value, and now that the accounting has been updated, they are complaining that it reflects too much volatility. At some point, it becomes clear that the complaints aren't about accounting, they are about emotional discomfort. So this slide paints a very simple picture. Strategy holds a historic amount of Bitcoin. It has aggressive but achievable yield targets. It has clear expectations for dollar gains in the billions, and it uses modern accounting standards that reflect the real market, so the haters can post all of their Twitter threads that they want. The numbers don't care about their feelings. Operating income is next. If we look at operating income, we're looking at -7 billion to 9.5 billion as the range. Critics will love to screenshot the negative end of this range because they think that numbers only exist when they support their worldview, and the truth is very simple here. The wide range just reflects that fair value accounting. Bitcoin moves, earnings move. Total shocker. Anyone who who pretends this is complicated is not confused. They are just dishonest. The net income shows the same sensitivity as well as the diluted earnings per share. So what do these potential negative on-paper results say? They just show that Strategy is a company that understands the volatility of Bitcoin, they respect transparency, and they communicate earnings sensitivity without apology. So the people that are calling this strategy reckless don't understand Bitcoin, they don't understand the volatility, and they do not understand why numbers change when asset prices change. Now, in my opinion, because we have seen Strategy raise their USD reserve from the ATM common stock offering, the critics are just going to retreat into the Ponzi scheme narrative, which is very low IQ and totally ridiculous. This is the most tiresome accusation in the entire Bitcoin ecosystem because it's from people who cannot even read. The famous Ponzi claim, a claim made by people who think reading 2 paragraphs on Investopedia qualify them to give forensic accounting commentary. So not only are the dividends on the preferred equities classified as return of capital, which literally means the company gives you your money back. That's correct. They take your money, then they give it back to you. They claim that they think that these dividends are going to be classified as return of capital for over a decade. Yes, per the company and per the IRS, it's your own money. Somehow it's a Ponzi scheme paying you the dividends from other investors. Even though return of capital literally invalidates the Ponzi claim entirely, we can continue to talk about the other things that debunk this ridiculousness. Let's talk about the insolvency risk critique, the claim that Bitcoin's volatility is going to force Strategy into bankruptcy through margin calls or debt defaults. This is literally just a fantasy. They now have a 21-month USD buffer as well as a Bitcoin buffer that covers 71 years. A company with nearly 2 years of liquidity coverage is not facing involuntary liquidations. The only people still repeating this argument are people with the IQ of room temperature. The second critique that you'll see from people are the endless dilution. Remember, every time people make this argument, they are ignoring the fact that every time they dilute you, your Bitcoin exposure as a common stock shareholder goes up. That's correct. As a common stock shareholder, you have a pro rata claim to the value of the asset on the balance sheet. Correct. The value of the Bitcoin, and every time you're diluted, your exposure to the value of that asset increases, yet people will still complain about it. They ignore the fact that the capital raised increases Bitcoin holdings, which gives shareholders more exposure to the asset that the entire company is built around. These people demand growth without raises, expansion without capital somehow, and stability without strategy. They want results without inputs. This is not how finance works. This is how wishful thinking works. And you know what's funny? Ever since they stopped issuing common equity before this last week, we only saw the MNAV go down, which just proves the let the MNAV breathe scenario is totally ridiculous. And the third critique is pure speculation. The critics claim that the company has no real business model beyond hype-fueled Bitcoin gambling. This is impressive coming from people who have never once read an SEC filing. Strategy has now a balanced treasury with cash and Bitcoin. It has disciplined KPI targets. It has transparent guidance. It holds 3.1% of all the Bitcoin that will ever exist. That is not speculation. That is a position. And the people shouting this line are the same people that posted in 2017 that Bitcoin would be illegal by Christmas. So to the stupid idiots out there, the takeaway is very clear. Ponzi schemes do not hold tangible assets. They do not hold cash reserves. They do not offer transparency. They do not publish forward guidance. And they do not give you your own money back. They do not have paths to profitability tied to real asset appreciation. Strategy holds 650,000 Bitcoin. It holds $1.44 billion in cash. It has structural protection against the very risks that the critics claim will destroy it. The only thing collapsing is the credibility of the people still using this accusation. So now let's go to the next slide and examine how Strategy has addressed the credibility credit rating agencies directly. Strategy's announcement today has done more than silence critics. It also boxed S&P Global into a corner and forced them to acknowledge that the company now satisfies the criteria that they gave required for a rating upgrade. This is what strategic competence looks like when it's being executed with precision. So amazing job to the strategy management team. So let's start with the rating challenge. Remember, on October 27th, S&P Global gave them a B- rating with a stable outlook. They cited some things such as a weak dollar liquidity relative to near-term obligations. Well, that has now been totally checked off. They also mentioned high exposure to Bitcoin volatility, which is obviously true. They're saying that it's creating unpredictable cash flows. Unpredictable cash flows, guys, from a company that's raised $27 billion in the course of 1 year. But yeah, really unpredictable. So Strategy has responded just over a month later with a direct, comprehensive solution to every single point that they gave. Remember, they talked about convertible debt, but Strategy is planning to let them equitize. So now let's move to the solutions that have been implemented. They now have enhanced liquidity because of their cash. The second solution is their prudent capital structure. They now have reduced refinancing risk. The fact that the critics call this reckless tells you everything you need to know about their level of financial comprehension. The third solution was market access demonstration, which they literally proved because they raised $1.4 billion, which proves that investors are willing to fund the company even during volatile periods. Shocker. And the ratings agencies are going to look for evidence that a company can access markets reliably. Strategy has provided that evidence with actual transactions. And the fourth solution is obviously their volatility buffer that they have. Their fiat reserves reduce their short-term exposure to Bitcoin's price swings. This addresses a key risk that the S&P flagged directly. Saylor's critics have spent years saying the company had no protection against volatility, and now that is literally just false. Now, in my opinion, another reason why this is so bullish is because this lays the groundwork for having all of their individual preferred equities get their own credit rating. Strategy did not react emotionally to this. They literally pivoted. They responded urgently and directly to measurable credit factors. Because the ratings upgrades, kids, they're not based on vibes. They are based on liquidity strength. They are based on capital structure, market access, and volatility mitigation. Strategy has delivered improvements in every single category. So this is proof that Strategy now has a balanced model. They run a treasury that combines a massive Bitcoin reserve with a substantial USD reserve, which gives the company stability, flexibility, and upside exposure without the panic responses that critics insist are unavoidable. Balanced treasury management is not a marketing slogan. It is an operational fact. This has silenced the critics because they are stupid and they cannot argue against this. The liquidity buffer has totally demolished any insolvency claims. The cash reserves cover obligations for almost 2 years. The Bitcoin reserve is backed by real assets. The guidance is transparent, and this is the opposite of a shaky business. The critics will continue to recycle the same arguments because they cannot accept the fact that Saylor is beating them, and Strategy has solved the problems that they said were fatal. They will continue to be credit enhanced because nobody can touch this company from its position of financial strength. They are going to play their own game better than they ever could. This announcement today has transformed all of the so-called vulnerabilities into competitive strengths. Strategy is not collapsing, it is becoming stronger. It is not unraveling, it is not being undone by volatility. Strategy is evolving, it is scaling, it is reinforcing its Bitcoin conviction while adding institutional level risk management. Critics said the company would break, instead the company upgraded itself. This concludes the presentation. My name is Adam Livingston, I am the Bitcoin Wizard. If you like this content, please like this video, subscribe to the channel, and help me spread the orange gospel to the masses. Have a terrific day. Do not party too hard. Class dismissed. Once again, a special thanks to Horizon for sponsoring this video. Most people don't realize this, but on average, 60% of American homeowners' net worth is locked up in their primary residence. And with home prices more inflated than ever, Americans now sit on a combined $35 trillion in home equity. Now there's a way to unlock that trapped capital and put it to work in Bitcoin. Horizon helps homeowners unlock a portion of their home equity to buy Bitcoin. It is not a loan, so there are no new monthly payments. You keep living in your home as usual, and then later when you sell, refinance, or choose to settle early, Horizon's provider takes an agreed share of your home's future value. That is the trade. Unlock cash now to stack Bitcoin by selling a slice of your home's future value while you continue living in it. What makes Horizon stand out is that there are no term limits and you keep 100% of the Bitcoin upside. The Bitcoin is fully yours to custody however you want, wherever you want, with no risk of forced liquidation. If you've been sitting on a pile of home equity and are eager to invest in Bitcoin, this may be the product for you. Visit joinhorizon.com to see if you qualify and get started. Their team of experts will work with you one-on-one from start to finish. Transform your dormant home equity into Bitcoin today with Horizon.